Not only is AMC taking a beating, the rest of the market, including crypto, is getting hit hard. What is causing this, or what is most likely to be causing this, as well as we got a little bit of some other very interesting news data that came out. You don't want to go anywhere. Before we get further, I want to say a special shout out thank you to our Patreon supporters. I really do appreciate it, guys. And a double shout out thank you to RemAG. All right, guys, please keep in mind, I'm not a financial advisor. Everything I'm sharing is my own opinion, my own research. I encourage you guys to go do your own research. With that being said, let's get into it. AMC down 4.11% on the daily, but in after hours, an additional 4.05%. And yeah, it is taking a beating, guys. It is down to $36.74 in after hours. And as far as for this big this big bull pennant flag, that's what I was trying to say. If we look at where we are right now, we are back within that channel. It did look like it was getting an opportunity for a breakout. It could have made a strong run. And where it is now, it is trying to work its way down to that level of support. And if it drops down below that, I mean, in theory, you could pull this down and say, hey, it could go all the way down here. But could it really? No, because that would be negative $10. Like, AMC would just be completely gone, right? So I don't see that happening. We got way too many catalysts that suggest that that's not going to take place. The earnings call that just happened the other day was absolutely beautiful. So something else that we can keep in mind, though, is how is this going to play out on the way down? Let's go ahead and take a look here. I'm actually going to reverse these. So let's go ahead and drop that down there. My apologies. And get that lined up right about, I would say right about there. Looks good. Okay, so as far as the retracement goes down, we do need to keep an eye on $35.55. That's the baseline level support I have established here. If it drops down below that, keep an eye around $33.28. A significant drop, having trouble with my words right now, would be down to $22.80. That's on the 0.786 of the Fibonacci. And a massive, massive drop would be down to $9.17. I don't think the $9 is likely to happen. We'll have to see if other news catalyst comes out between now and potentially then. But I don't see that as being a likely case. This does have an opportunity to hang out within here. And it still has to around November 26th before it needs to make a real big key decisive move. If it's going to drop down a ton or a significant amount, or if it's going to come back up and start to make a rally up once again. Okay, so that's as far as the technical analysis indicators go. The only other thing I can say is that looking at it on the daily, volume very low once again, 31.67 million, and the RSI based right in the median zone. Looking over here, you guys can see 2.4 million shares available to borrow. We got 33,352 ETF shares available to borrow. The fee rate's still at 0.6%. Out of the money, call options 182,000, and of course, it's not going to document the dark pool data because they just kind of gave up on that, I guess. Dark pool data over here shows negative 81.7 million shares. We have negative $3.2 billion. All right, now some very interesting news to share with you guys. Well, actually, before I show that, just to prove my point, the rest of the market is taking a hit. This is crypto. Like, pretty much everything is in the red. And Bitcoin was doing great earlier today, and then whoop, it just went right on down. For those wanting to know, link in the comments. This was from Apparently Exempt over on Twitter's side, posted on the subreddit by Just One More Bet. So, anyways, it says, hey there, SEC enforcement. We said we knew exactly what was making the share price of AMC drop. We predicted that we'd be able to show data to prove our point. Predictions are so powerful when you're right and can show for it. Here's a thread. So it says, our followers and visitors of our website already know what short exemption is and what it does. The SEC does too. We filed a complaint after all. If you, the reader of this thread, don't, please consider visiting our website. Let's start. As we have determined, the parties abusing this algorithm we identified will use the unregulated short exemption to circumvent Reg Show's uptick rule. Short exempt volume of short volume, or SEV of SV for short, is the metric we utilize to determine the use of this algorithm. With that out of the way, we like to be transparent about the data we use. We gather data from the New York Stock Exchange about the ARCA, AMEX, Chicago, New York Stock Exchange, and national exchanges. Stock price data is published by the NASDAQ. Let's dive in. Yesterday was the first time in a long while the AMC dropped over 10% and subsequently triggered SSR. This is also why we knew what was happening. Now we have the data to back it up. Where'd it go? As you can clearly see, SEV of SV suddenly jumps to well over 10%. Hey there, algorithm. To be clear, we added data from the days prior as well to show this is happening only on big drops. This had nothing to do with retail cashing in, retail being disappointed with earnings, or whatever fairy tale media wants you to believe. It was intentional algorithmic abuse. We have filed a complaint to the SEC. We still haven't received a reply. We can't directly change this until they act, but we can be loud about this. We don't use calls to action normally, but please like and retweet this thread. Apes Together Strong, hashtag apparently exempt. So, yeah, absolutely disgusting what we're seeing going on. And now another huge contributing factor is this. China's Evergrande Group officially defaults. This is a very, very big property company based over in China. China Evergrande Group officially announced that it had defaulted on Wednesday after bond holders awaited coupon payments at the end of a 30-day grace period at the close of Asia business. Evergrande, the world's most indebted developer, has been stumbling from deadline to deadline in recent weeks as it grapples with more than $300 billion in liabilities, $19 billion of which are international market bonds. The company has not defaulted on any of its offshore debt obligations yet, but a 30-day grace period on coupon payments of more than $148 million on its April 2022, 2023, and 2024 bonds ended on Wednesday. The failure to pay results in a formal default by the company and triggers cross-default provisions for other Evergrande dollar bonds, exacerbating a debt crisis looming over the world's second largest economy. For its two separate offshore coupon payment obligations that were due in late September, the developer's bondholders did not receive the payments until one working day after the 30-day grace period ends. Evergrande's problems add to concerns about a liquidity squeeze in the property sector. It also has coupon payments totaling more than $255 million on its June 2023 and 2025 bonds due on December 28th. China's property woes rattled global markets in September and October. There was a brief lull in mid-October after Beijing tried to reassure markets the crisis would not be allowed to spiral out of control. But concerns have resurfaced, with the U.S. Federal Reserve warning on Tuesday that China's troubled property sector could pose global risks. So yeah, this is pretty bad, guys. Moving their rating. You guys can also see Shimao Group Holdings rating to BB plus from BBB minus over concerns that tough businesses conditions would hinder the company's efforts to reduce debt. Considers a rating under BBB minus to be a speculative grade. Shares of developer Fantasia Holding plunged 50% on Wednesday after it said there was no guarantee it would be able to meet its other financial obligations following a missed payment of $205.7 million that was due on October 4th. This is this sucks. But at the same time, this is kind of good. The reason why I say it's kind of good is because typically you see a massive dip before the massive, massive rip. We saw it happen with Volkswagen. A lot of people have been speculating on this, that's what would likely take place too. So the hope is that as the price of the stock market actually starts to crash, that will force margin calls. It'll force people that are indebted to pay off their debts to try and create some more stability within the stock market to be able to move forward once again. When those executions of margin calls take place, that has the possibility to shoot the price up, then causing a short squeeze, or in this case, the mother of all short squeezes. Okay, I'm going to go ahead and end the video there. I do have a referral link in the description. Let us know. Referral links in the description. Let us know what you guys think about all this in the comments down below. If you guys are new to the channel, don't forget to hit subscribe, hit the thumbs up like button. It definitely helps us out with the YouTube search algorithm. Click the bell icon so you know whenever we got a new video, we go live, and I will see you guys in the next episode.